Hello guys and welcome again to the channel. So today we're back with the bit trading for beginners series, the playlist that I'm explaining trading concepts and trading in general to the most beginner level education. And today we're with the 7th episode where we are explaining what is a candlestick. So let's jump directly into it. So basically, what is a candlestick? As you can see here, if you watched our last episode, which was the 6th episode, we spoke about how we can make our chart in TradingView like this and how we can set up TradingView. Actually, if you didn't watch that video, you can go back, watch it quickly, and then come back here. So basically, this is our chart. So we can see here that there is these forms that are printing one after another, like each minute or each 5 minutes or each 1 hour, depending on the time interval or the time frame. So basically here, as you can see, we have, for example, the 15-minute. This is the 15-minute chart. What do we mean with the 15-minute chart? We mean that every and each candle of these ones is representing 15 minutes of time. So basically, as you can see here, we have, for example, 10 p.m., the one after it, 10:15, the one after it, 10:30, and then 10:45, and on and on and on. For example, we take another example, the 5-minute. Each candle represents 5 minutes, the daily time frame. So basically, this is a daily candle. As you can see here in the timer, we still have 20 hours left in this candle. This one is yesterday's candle. This one is pre-yesterday's candle. So I guess you understand now the concept of and the correlation between time frames and candlesticks and charts. So basically, time frames is simply how much time is in a singular candle. Now, to explain what are candles, candles are mainly built from two main things that are, first of all, body of the candle. Let's move a little up. Body of the candle. And then we have wick of the candle. So basically, let's take here the example of a candle. This is a bearish candle, for example. Let me take this one with us. This is components of candle. Like this. Sorry, give me a moment. Like this. And then like this. So basically, this is a candle, right? We can see here a candle. So the part that is colored and that is the rectangle one, the rectangular part is called the body of the candle. So this one is the body, while these lines on top and on bottom are the wicks of the candle. So let's take a chart example. So basically, let's take this one. Let's take this one, for example. Wait. Yes, let's take the green one. For example, as we can see here, we got the rectangle part, and then we got these lines on bottom and on top. This is called the wicks of the candle, and the rectangle part is called the body of the candle. So basically, these are the components of a candle. Now, the next thing that we are gonna explain is how many types there are in candlesticks. We have mainly two types that are whether, wait, let me go back. So we have a bearish candle, which is the red one, and we have a bullish candle. So basically, this one is a bullish candle. We mean by bullish is that a buying candle where the buying power is stronger than the selling power, that it turned the color of the candle to green or to red if it's a bearish candle. So basically, a bullish candle was bullish. The word bullish came from a bull. and the bearish candle came from a bear. So basically we say in a bearish candle, bears are stronger than bulls, and in a bullish candle, bulls are stronger than bears. So basically these are the main two types of candles. We have a bullish candle and we have a bearish candle. It's usually the green and the red color, but sometimes people change colors depending on their preferences. Now, what's the next thing that we are gonna explain? We're gonna explain how a candle builds in time. So, from the first look of a candle, let's start by a bullish candle, for example. From the first look of this candle, we can easily say that this is the opening price. Like this. This one is called opening price. And this one, wait, this one is easily, we call it the closing price. On the bearish candle, it's a different thing. It's the opposite. Wait, let me show you. So basically, in a bearish candle, we have this is the closing price, and this is the opening price. How do we know this? So basically, if we're talking about a bullish candle, and we're talking about bulls are stronger than bears. So basically, within the candle, the price was in a level, and after the closure of that bullish candle, the price closed in a higher level. So basically and logically, the opening price of the candle must be lower than the closing price in a bullish candle. So the candle opens like this. Wait, let me show you. So basically the candle comes like this. So basically this is the candle. We have the opening price, then the candle makes a low, a wick, and then makes a high like this, and then closes here. So basically this is the lifetime of a candle. We got the opening price here, we got the low of the candle here, we got the high of the candle here, and we got the closing price. So to continue explaining, this is called high of a candle, of the candle. And this is low of the candle. So basically what happened here in this particular candle is that the market came, opened right here in this particular price, then made the low of the candle, and then pushed upside and made the high of the candle, and then closed here. So basically, with this thing left us with a candle with a rectangular green body and a wick from the up and a wick from the down. Now let's compare this to the bearish candle case. We have here the high of the candle, and we have here our low of the candle. So basically in this particular scenario, price came and opened here, actually, because we have a bearish candle, which is logically means that we opened in a price and we closed the candle in a lower price. So basically we opened here like this. Sorry, we opened here like this, and then we came higher and we made the high of the candle, and then we pushed down, 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 and made the low of the candle, and then closed here. So basically this is the lifetime of a candle like this, the lifeline of a candle, of a bearish candle, and this is the lifeline of a bullish candle. So I hope you understood this. Let me re-explain it another time. In a bullish candle, we open the price, we make the low, we push higher, we make higher prices, and then we close. In a bearish candle, we open higher, but we close lower, like this. A bearish candle is usually red and the bullish candle is usually green. Each candle represents a certain time depending on the time frame that you are selecting from here, from this bar on the top. And the candle is mainly a body and a wick. Sometimes it's a wick just from one side, sometimes it's from the up and from the down. And I guess this is all. We have two types, a bearish and a bullish candle. Now let's see just a quick example on the real charts. So let's take any candle that you can see, any candle. You can find that, for example, let's take this one, this 530 candle. We came here, let me zoom it out. We came here, we opened right here. This is the opening price of the candle, marked with the blue color. And then we made the low of the candle, marked with the green color. And then we pushed higher and made the high of the candle, marked with the orange color. And then we closed here. This was the closing price of the candle. And logically and usually the closing price of a candle is the opening price of the candle that comes after it. So basically this candle of 545, we opened at the same closing price of the last candle. Like this, we opened here, marking with the blue color, and then we came and made a high, and then made the low and closed. The closure price becomes the opening price of the other candle, of the next candle. We opened here, we made the low, we made the high, and we closed. We closed here, we opened the other, and on and on and on. So this is all you can see right here. The chart is a bunch of candles opening one after the other, and that's how a chart is printed. I hope you understood my explanation, and sorry if I take too much to explain simple things, but I'm trying as much to make you understand the basics from the ground level, so you can have a strong basis for the things that are coming in the future. There will be some higher level explanations, but we're going step by step, and that's it. So thank you for watching today, and see you tomorrow with the new video.